The first question which comes up is, what is the need of a tax treaty? So why is it that we need a tax treaty, and what would happen if such a treaty did not exist? Think of an Indian company. Okay, suppose this company which is in India, and let's call India as the source state, takes some services from a foreign company. So here India is the recipient of services from a foreign company which is a residence or a resident of a foreign state, right? To obtain these services, the Indian company may make certain payments to the non-resident, which could be in the nature of business income, royalty, dividend, interest, or anything else. Now, when this income is paid, what India would want is that because the source of this income is in India, the non-resident or the foreign company should pay taxes in India. Let's for a minute assume that the total payment which is made is $100. Assuming India applies a corporate tax rate of 30%, the tax that the foreign company has to pay in India is $30. So the net cash flow which the foreign company was going to get is going to be $70. Right? Once this money flows back to the foreign state, this foreign country would also want that the foreign company should pay taxes on this income in there. And the reason for this is very simple. Just like in India, if you remember, there is a rule that a person who's a tax resident of India has to pay taxes on its global income. The foreign country may also want that they pay taxes on their global income in the foreign country. If that happens, think for a minute that this gentleman might have to pay on $100 of income that he got from India, let's say $20 as taxes in the foreign country. Right? Now he got $70 from India. On this $20, he pays another $20 as taxes in the foreign country. What is the net amount he's left with? He's left with it only $50. In such a situation, where the foreign company has to pay $50 as taxes out of the remaining $50, they would be thinking twice whether it is feasible to do business in India or not. And that is where the need for a tax treaty arises. In such a case, what can happen is that the foreign country and India may enter into a treaty whereby they may say that instead of India imposing $30 and the foreign country imposing $20, they may actually impose a total tax of $30, and they may agree as to when India can rightly tax this amount or some part of it, or when the foreign country is going to tax some part of that amount.